Welcome back, Assassins. Welcome to our lesson number 2 on how to start trading as a complete beginner. Our first lesson, we covered mistakes to avoid and mindset. Today, we're going to start talking about candlesticks. Candlesticks or candlestick patterns are overall a receipt in the overall stock market telling you what happened in the stock during a certain period of time. Right now, we're on a 1 day, 1 minute, meaning each candle on this chart forms at 1 minute, right? So every minute there's a new candle telling us, hey, did the buyers win or did the sellers win, right? This is time and sales over here. You can see actually sellers, you can see buyers, right? Now, if there's more buyers than sellers, this candle will turn green. If there's more sellers than buyers, then the candle will turn red, right? So buyers outweigh the sellers, then it'll turn green. Sellers outweigh the buyers, then it'll turn red, right? So there's different time frames we could focus on. We could focus on the 1 day, 1 minute, which is more geared towards day trading. You could do 20 day, 1 hour, 180 day, 4 hour, right? Yearly, 1 year, 1 day, right? Meaning each candle on that chart is 1 day of information. Very important if you're trying to understand the overall general outlook or where that stock is actually going. And you could even look at the 5 year, right? Say if you're looking for major swing trades and overall major market direction, you could look at this chart, right? But let's jump into how to read some candles, right? So on the bottom of a green candle, the price action actually opens on the bottom of the shaded part, right? So the bottom of the shaded part is where the price action opens. So if we look at a green candle, the price action opens over here. Let's say we're looking at a 60-minute, 1 minute candle, right? 1 minute, and each minute there's 60 seconds, right? So within 60 seconds, we're going to use numbers in here to give us a gauge of how the stock is moving. But overall, these numbers do not matter, right? So let's look at the bottom of the shaded part. Let's say the top of this 1 minute, right? We open at $5 over here, right? Now, because there's a wick at the bottom, I like to think of wicks as signs of stress, meaning the stock is reaching for a certain point, but it's not staying there, right? So no matter if you see a green candle or red candle, there's always going to be buyers and sellers within that time period, right? So where you see a long wick at the bottom, that means that, hey, there were some sellers, meaning the stock had dropped in value. Let's say it dropped to $3 over here, right? Meaning it opened at 5 at the top of that 1 minute and it dropped to $3, right? Because it's green, we know buyers were in here. So it started to go up in value. There's more buyers and sellers. The long wick at the top is representing, hey, it reached to a certain price point. Where did it reach to? Let's say it reached to $8 up here. Now, when that 1 minute was over, let's say it closed at, let's say, $7 over here, meaning the stock went from 5 to 7, but it squeezed to 8 and it dropped to 3, right? So very important, just so you can understand the rhythm of the stock. The numbers do not matter, but the wicks basically represent signs of stress, right? So on the red candles over here, same thing. We're looking at 1 minute candles each minute, right? There's a new candle. So the price action opens on the top of a red candle, right? Let's say it opens at 7. Because there's a wick at the top, meaning, hey, there were some buyers over here. Let's say it went to $8, right? Now, because we know it went red, that means it dropped in value, right? Where did it drop to? So it had dropped within that 1 minute time frame. Let's say it dropped to $5 and then it end up bouncing. It closes at the bottom of the shaded part and let's say it closed at 6, right? So green candles, the price action opens at the bottom of the shaded part and closes at the top. The red candles, the price action opens at the top of the shaded part and closes at the bottom, right? So let's look at the next slide over here. So I like this example because it shows you that just because a green candle is green doesn't mean that it means that it's showing full strength over here, right? Let's say the top of all these candles, the top of all these candles represents $30 and the bottom of all these candles represent $10, right? So that means that, hey, the green candles went from 10 to 30, red candles went from 30 to 10, right? So the red candles dropped in value, green candles increased in value. So if you see a candle with no wick, that means, hey, the majority of the people inside of this stock were buyers, right? If you're seeing a candle with no wick and it's green, majority of people inside that stock was buyers, right? So that means it's very bullish. If I see a green candle like that, then it's sure to expect that, hey, we may have some type of continuation to the upside and the next candle may actually be green. So let's see if you see a candle to the upside right here, right? It went from 10 to 30, but we're showing some wick over here. So that is a negative sign. That means that green candle is showing signs of weakness, meaning, hey, it went from 10 to 30, but it dropped in value. Let's say it dropped to 20 over here, right? Meaning, hey, there's some sellers starting to come into here and we may flip bearish and start seeing some red candles to the downside, right? So if you're in a long position betting on that stock to go up, you may want to be cautious if you see candles like this, right? That means that we're showing some type of weakness. Whenever you see long wicks to the top of a green candle, that means that there's some weakness going on in that stock and we may start to flip. Let's say if you see wicks to both sides, right? Equal wicks to both sides, that means it's neutral, meaning you may want to pay attention to the next following candle. Now, let's say a red candle, no wick. That means full selling, right? That means the next wick, the next candle may be red, and we could continue that bearish trend to the downside, right? I see these candles over here, right? These candles, whoa, what's going on? We have wicks to the bottom. It went from 30 to 10, but it bounced, right? Why did it bounce? Some buyers are starting to step in. So let's say that's it. So let's say it went from 30 to 10. Let's say we see a wick on the bottom. That means, hey, it bounced. Let's say it went to 20, right? It bounced to 20. So if I see a candle go from $30 to $10, which is a monster move, and it bounced to 20, that means, hey, we may have some bull stepping in and it may start to bounce and change course, right? So very simple way on how to read candlesticks. Candlesticks are very important. Hopefully you guys learned something from this video. This is part 2 of our lesson, right? The beautiful part about doing this during market open, we could actually see candles start to form right over here. Let's drop down towards the 1 minute. Even though the market just closed, you could still see there's still some people buying and selling shares right now. Or you could see somebody bought 10 shares, right? Somebody sold 4 shares. And all of this action right here, all these people are buying are in this little candle right here, no matter how big or small. Now, why are some candles bigger and why are some candles smaller than others, right? If each one of these formed underneath 1 minute of time, right? Well, glad you asked. Our last lesson, we talked about volume. So if I float over this candle, this one red candle had basically 198. You can see it over here. 198,000 worth of volume, right? Just think about it, 198,000 people inside of this one candle over here, as opposed to this little peep squeak over here only had 101, right? So the more volume, the more people inside of that candle during that minute, it's going to give it a larger body. As opposed to a smaller candle, you're going to see basically a smaller body towards that candle. Just like this candle right here, 6,000 in volume, right? Very small. Not that many people. The market is closed right now. But if some people were to start stepping in, then the volume will increase and we'll have a bigger body, right? Now you can see that 1 minute just ended. Now we have a new candle forming here and it's starting to move up and down and we'll have a new candle to judge what's overall going to happen with this stock. But candlesticks are very important, especially when we start jumping into our next lesson. So make sure you guys stay tuned for that. Our next lesson is going to be on support and resistance, finding key areas of possible entry and exit in a stock. So make sure you guys like and subscribe. Stay tuned for the next video. Peace.